Ladies and gentlemen, Google reports how I'm going to look to trade it tomorrow, our game plan in Forex, as well as our full stock analysis. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Just give me a second here. The screen's going to just go black here for a moment as I show you what's on tonight's agenda, how the market was today, how we approached it, how I'm going to approach it. And we're going to start off with Google. It's a pretty well-known name, pretty large name here in the market, and what it actually did today. So let's just go right into the action here. We could see Google right now just down a little after hours, and this is actually beautiful. So I'm going to take you right over here to a live 5-minute chart. You could see after hours the stock pulled back to 1067, shot up to 1123.99, and then pretty much fell from there as it's barely negative. This is a gift. This is a rare situation where it's a gift, and I'm going to tell you exactly how I'm going to approach it. Is there a way to buy and take advantage of Google tomorrow? Of course there is. So, as I said on the prior Newsbeat show, there's about a 0% chance that Google was going to miss on earnings per share. And they basically announced $13.33 versus the $9.31 expected. That first of all tells you how bad Wall Street analysts are. They're making a lot of money for the most part. I'm not saying every analyst, I'm just saying 98% of them. Like, how stupid do you have to be to actually have a consensus of $9.31 on Google? Why is it that the average consensus always gets beaten? And I was actually thinking about that, and maybe these analysts aren't as dumb as they look on the outside. So Google comes out analyst earnings per share by $4. Oh, so a company like Google beats your average consensus by a little under 50%? Like, you didn't see that coming? And then I realized something, that these analysts are buying Google and they're putting these low projections on it because the companies own Google and they want to show like Google keeps beating their expectations. And that is why analysts put these artificially low expectations on Google, so they do have the opportunity to beat. I just thought they were just the dumbest people on the planet, and now I think they're scum and geniuses at the same time. But on that note, let's go through more of Google's earnings. Isn't it funny how what was the last time Google missed on earnings per share? I'll give you a hint. Never. Never was the last time. That's interesting. Wouldn't the analyst get wizened up by this point in time? Credit Suisse coming out, lowering the price target this morning. I thought that was an interesting thing. They said the paid clicks on Google properties are up 59%. A new accounting standard impacted earnings per share by $3.40. Okay. They're pleased with continued momentum in earnings growth. Alphabet, which is Google, says they have heard from over 300 news outlets about subscribe with Google. They say artificial intelligence in healthcare is truly exciting. Google Home continues to be super popular because we're all just a bunch of 21-year-old blonde women from the valley. No offense to any blondes out there. And we're just like, oh, I think it's super popular and super awesome. Like, who talks like that? Oh, one of the biggest companies in the world. It's super popular, according to the CEO. Oh, that totally. Like, totally. That's just totally awesome. And they also say that Waymo, the publishing partner, is very early. They're very early in the progress with them, and they're testing it in more states. Okay, so what happened? Google shoots up, shoots down. What is the opportunity? How I'm going to trade it, and why I'm going to trade it, and First of all, this is a gift. We have an opportunity to make a lot of money, I feel, on Google tomorrow. This is what I'm going to do. For argument's sake, I'm going to be talking about GOOGL. You could do the same thing on GOOG, but I'm using different parameters because GOOGL is slightly more expensive based on the voting right. So this is what I'm going to do. Here is the rule. I'm going to give you a set of rules. I'm going to write it down on a sloppy napkin here, also known as Notepad. And rule number one, Melnick rules for Google Strangle, excuse me. Strangle, and that means your buy calls and buy puts out of the money. Okay, so what is rule number one? Rule number one tomorrow is Google gaps up or down $10. Okay, gaps up or down $10. You're up 10 points? Fine. You're down 10 points? Fine. You're anywhere within that 20-point range? Fine. Fine. Everything is all good. Everything is all good. If you could do that. I'm going to show you step number two. Now, depending on how it opens, this might actually be an extremely high conviction trade, by the way. So extremely high conviction, I don't know what that means to you. I know what it means to me. It means I'm going to throw a decent chunk of money at it. So with that being said, this is what I want you. I'm going to come out with the number. I'm not here to explain it. I'll explain it during my education course. And it is, we are walking into a Tuesday with Google earnings. And here are the rules. That's the rule. Mark, speak English. What is a $22.82 spread in a $5 strangle? For example, Google is trading right now after hours at 1069.10, right? Let's call it 1069, right? That's the after hours print. So what I'm saying is you buy 1070 call and the $1,065 put. It's $5 spread. It's the call and puts that are $5 apart, but you must pay this or less. Less is better, but you must pay that or less while still following rule number one. It has to still be within a $10 spread. I can't have you guys watching Google. It shoots up 40 points and you're like, oh, look, now I could do the $5 spread for $22. No, bad trader. Has to be within that $10 spread, and you have to pay that amount or less. Period. If you can do that, and you can do it early. Oh, I have to give rule number 3. You have to do in the first 20 minutes. Eastern Standard Time. You have to do it before 9:50 a.m. Eastern Standard Time. If you could follow those 3 rules on Google, your odds of making money on this trade are about, not, you can never say it, but it's about 100%. The chances that you will be up money on this trade by Friday, most likely you're going to be up tomorrow, by the way. But even by Friday, the odds of you being up money on this trade is about 100%. My success rate last year on parameters identical to this for different stocks is 100%. But I'm not crazy enough to say it works 100% of the time. I'll just call it approximately 100%. You guys are very clear on this, right? And if you're in the Newsbeat room, I'll be going over this trade in real time if I take it. Maybe Google, I come in tomorrow morning with all the upgrades and downgrades and it's down 30 points and I say, screw it, I'm done with it. Forget it. Forget I ever said that. But even if you're down 30 points in Google and it's before 9:50 a.m. and then it gets within the plus 10 to minus 10 range, the trade is still valid. Okay? You have to take it with the plus 10 to minus 10 before 950 in the first 20 minutes of trade, and you have to pay that amount or less for a $5 spread strangle. You can buy calls and you're buying puts, and they have to be $5 apart. And, oh, just so people don't do stupid things, let me just correct one thing. Thank you. Both have to be out of the money. I know I mentioned it on top, but I'll mention it again. So if Google goes, for example, to 1,070, I don't want you to buy an $1,100 call and a 1095 put. Or I don't want you to buy, I don't want you to do stupid things like that. You have both your calls and puts have to be out of the money. The call you buy has to be higher. The put you have to buy has to be lower than where the stock is trading at that exact moment. If it isn't, you don't have a trade. Just want to be clear. No confusion. It's pretty simple. Okay. Not a good trading day overall, right? For the most part, the majority of people I spoke to lost money today. They were grinding, they were trying these little trades here and there. The majority of people lost money in the market today. What I did today was 3 trades, 3 garbage trades. So I need to just show you, and I think this is so common. And what I did was I highlighted and underlined the names I actually traded today. But here's our pre-market game plan that we share with you at 9 o'clock every single day. And I think I was listening to a webinar, and it was this guy who has one simple strategy, and it's really good. And that person was going to teach me that strategy. And it was a $700 course, and I'm telling you, the way they pitched it, oh my God, that person should have tried out for the New York Yankees. He pitched that thing so well. I was just impressed. I was like, damn, that guy's pitching really well. Like, I'm actually interested in this strategy. So I went ahead and I purchased this strategy. He pitched it so damn well. $700, and I took it, and he tried to show me a little trick he had, and the little trick sucks, and it can't work consistently. I was like, all right, whatever. I threw $700 at it, whatever. It didn't piss me off. The guy pitched it so well. I was so impressed with his pitching. I had to see it. It was like one of those things. And then I saw the strategy, and it sucked. And then it made me realize something. And this type of market environment is that most things stuck out there. The bottom line is a lot of people get sucked into strategies which claim they're going to show you something really easy, or a point system, or a simple candlestick formation, or this magic technical parameter that shows you if a stock is bullish or bearish. And everybody loves to point at these systems, look at this stock. You want to know if it's bearish? My system will let you know if this stock is bullish or bearish. Or my system will let you know if this thing is bullish or bearish. And they'll usually go against something arcane, whether it's like a gap, which is one of the harder things that people try to learn out there. And they'll rate like certain gaps. They'll rate certain candlestick formations. With power, they'll rate certain moving averages. Oh, the 200 moving average, yeah, that's huge. That's a buy. No, it isn't. And it hasn't been for the past 10 years. You ever try buying on a 200 moving average? Let me know how your P&L looks. Not good. Not good. So then I realized something, and this is going to be enlightening to all of you, is that it's just mostly garbage. It's mostly garbage. The bottom line is, in this current environment, maybe not the old current environments, here's why I was showing you before the trader A, B, and C, and how certain traders, who buy at certain levels, are down money and then they're up money, or down money and get stopped out. The bottom line is, if your system is good for the masses, which what this is, I know there's people who are solid traders whose P&L goes down, they'll get stopped out, they'll jump back in, they'll get stopped out, they'll jump back in, and they'll make their money, and they'll make more than they got stopped out on. They'll be like, look, nice trade. There are really talented traders in this world but the masses can't follow them. That is the problem with following a good trader or following somebody who has a good system, because here is the bottom line. The only way, or what I found out, and again, please understand, I've been doing this 11 years. A lot of the broadcasters out there are still in diapers compared to where I am on an experience level. T3 has one of the oldest, old school broadcasters out there, and I like that, and I love this firm, and I'm just generalizing for everything else out there. But like, I've been at this game long enough to look back at what I did, and I said, wow, I suck. God, wow, did I suck as a broadcaster. Whoo, wow. I would pay money to not follow me. How many people can say that? People don't say that. People don't talk like that because there are people out there who are so hell bent in their methodologies that they see something and that they feel everybody could follow them. And a huge majority of them can't even make money in the market and are not even trading still. And another percentage of them are really great traders who can follow it and make money, but can't instill it to the majority of the people following them. So the only way, the only system that works, and again, am I biased? Yes, I'm biased from 11 years of experience doing this job and talking to people. Would I follow me today? Without a doubt, I would pay $5,000, $10,000 a month to follow me. I know, sounds conceited now, right? I'm the same person who said I would pay money to not follow me. 7, 8 years ago, I wouldn't follow me. I was okay, but I wasn't where I am today, right? So the only way you could really help the masses, which is what you're really doing when you're in a room. There are people with several different financial restrictions, financial liberties, different situations. The housewife at home with a husband with a good paying job is not under the same pressure as the dude who has 2 kids and a wife and is trying to pay their bills that month. It is a complete different mentality, and nobody talks about it in trading. They just assume, well, you know, everybody could just sit there and wait for the market to get good, and when it does, you can hit it. But there are traders who come in every day and they're like, shh, I gotta crack this thing right now because I can't write a letter to Verizon, my mortgage payment, and say, hey guys, the market really sucked this month. Can you just hold off until I really do it? Because they don't care, right? So I said, is there a way to genuinely help the vast majority of people? 100% of people will never succeed in this business. However, I was really trying to, stop the revolving door policy where one line goes in and one line goes out, and it keeps spinning as you pour marketing dollars into it. I was really trying to retain a community that's really building upon itself. So what I said was, the only way you could get a community into something is if you trade a name and you have the people enter in if you're buying at the day lows or shorting by the day highs. Anything else, and you're going to run into problems. If I told all you guys right now, buy, I would never tell you, but let's say I called out a long in a $50 stock XYZ. And I think the stock is going to $55. That's where I think it's going. So everybody, myself included, buys at 50. The stock goes to $48.50 and then goes right to $55. It drops $1.50 and then jumps $6.50. Get it? $50 to $48.50 all the way up to $55. How many of you guys got stopped out? What percentage of your room already lost money and took the loss? And then you know what happens? You have that stubborn SOB who held the stock. A group of those people ran up and they're like, Mark, sick call. I sold out at $55. Amazing. That was incredible. And you have the other 85% of your room saying, yo, what the hell, man? I couldn't hold it through that $1.50 loss. And that is the problem with today. So With that being said, today was a slow day for me. I did 3 trades. I made money on all 3 of them, and it was a craptacular day. So let's start off with what I did. PTC, right from my morning game plan. As you can see right there, it's number 4, right? You see number 4? I just highlighted and underlined it afterwards because I just went back to see what I actually traded. I actually gave 8 names this morning and traded 3 of them in real time. So how did it look when I bought PTC at the day lows? How did it look like? This is how it sounds like on the broadcast. Guys, I'm watching PTC. I'm watching PTC here. I'm looking at the $85 make calls. It's a bit spready, so I want to get filled on the bid, guys. But if you crack under $84, I'm going to try to put in the best bid and try to get filled. I'm talking like this when it's at $84.50, right? The stock drops to $83.69 where I buy in real time. And I'm like, guys, I got filled this many contracts at this price on those $85 calls. So first off, I set everybody up with my intention. So no matter how slow your software was at that time, you should have been able to, if you planned on taking this trade, queue up an order and get ready. And I bought here, and immediately it spiked up. And I sold, and I made, what did I make? Let's go ahead and see. 15, 35. Okay. So I made 33 cents. I made about a third, about 20%. I made about 20% profit on my May options in about 10 minutes. Not bad, right? That was the first trade I did. The second trade I did was First Solar, and that was the trade that I thought ended up really sucking. So how does it work with First Solar? It starts off with the stock is flushing underneath $75, and I'm like, guys, I'm going to buy the $75 calls and First Solar on the bid because it's a little bit spready if this stock continues to flush down. I will let you guys know immediately when I get filled on these $75 calls. That's how it sounds like as it's going down. Where you see the words buy here, that's me saying, okay guys, I just bought it right now at this price. I want to see the stock get above 75. It blips above 75, pulls back to the 74.70, 74.80s, and I sold. Quick profit, done. And I'm announcing, guys, I just sold out right here. I'm out. That's how it sounds like. So the next stock I did was actually the thicker, easier name to trade, I felt, was Merck, because the options are extremely tight. The stock is extremely tight. There's no massive range in Merck. And with Merck, I'm watching and I'm like, okay, guys, I want to see the stock flush 59.50. And I'm talking to you guys like this when it's in the 59.70s and 80s. I'm like, guys, this is where I want the stock to go. And if it does, I'm going to throw in a market order on the $60 calls expiring this week. That's what it sounds like. Okay, guys, I'm still watching Merck. I'll let you guys know if I go in. Okay, Merck flushes to 59.50, doesn't break 59.50, goes to 59.51, 52, 53, 54. I'm like, all right, guys, I'm buying right here. The calls went up 20% in around 3 minutes. Boom. Sold them. There were people in the room who held it stubbornly, but they weren't going through pain. They weren't going through massive amounts of pain. And there's somebody in the room, Thamer, great job on this one. He was able to sell over $60, but he was in from the day low, so he wasn't going through pain. So what is the point I am making? Those are the only 3 trades I called out today. I don't call out 50 trades. Some people feel like it's very important to throw out as many trades as possible, but in actuality, it's kind of silly to throw out many trades because that's where you start taking away from consistency. The reason why certain rooms like to throw out a lot of trades is because they feel that's what the audience needs. They feel like the audience needs 100 trades, and then what they like to do is they like to come back and be like, yo, by the way, here's an example of what I did. Here's an example of what I did. This was a trade we called out today. This was a trade I called out in real time today. Oh, really? Did you mention the others? Did you mention all the other trades that you called out during the day that you took that didn't work? Are you just, if you call 50 trades going up and down, eventually you'll have some right. How easy was it for you to follow that trade? Was it your fault that it was hard to follow, or was it the broadcaster's fault? So that's what I really feel brings consistency to the masses. Those, by the way, were the only 3 trades I called out today in terms of me taking a trade. There were a lot of trades in which I was queuing up for, and I was like, guys, I'm thinking of buying this here. If I buy it, I'll let you know. And then I don't do it because I prepared for it, and sometimes I go in, sometimes I don't. Depends what the market is doing, right? That is what led to the explosion in members of the Newsbeat live room. Because if you're able to put as many of your members as possible in a situation where it's hard to lose money based on the ideas you're giving. Look, a trader will trade 30 ideas and they could lose money on their own ideas and no broadcaster could stop that. I'm not the one pushing the buttons on your keyboard. But you know how many traders were having rough times in the room? They reached out to me and I sat there with detailed emails trying to help them because I care about their P&L. And I said, hey guys, why don't you just try stop trading what you're doing and try trading what I'm doing? And as one trader said, Mark, I was making money on 40% of my trades. Now I'm making money over 70% of my trades after I listened to you. I feel like trading now is less about shooting field goals and more about just making free throws. Give a beautiful basketball analogy. That's a member of the room listening in right now, and I know you're here. So consistent making money in the market is easy. I'm telling you. It's holding on to it is the hard part. Making money in this market is very easy. Like when I wake up every morning, I'm like, wow, I'm probably making money today. Maybe I make 1,000, maybe I make 20,000. But if I'm wrong, I'm not losing more than $500-600, $100 if I'm wrong. And I know that. And those are the type of ideas that I come because those are the type of ideas that are just going to turn your trading into a career as opposed to, a cowboy rodeo match. The bottom line is, and I implore you, ladies and gentlemen, because I've seen it and I've done it and I've been that person on the other side talking about just my winning trades, and I've been on that person on the other side showing my $50,000 days, but not really showing you when I lose 8, 9, 10 grand. I was that person, and I was that person 10 years ago, and I understand how the system works. I get it. But now, it's all about putting traders in positions that are not causing pain. Because that is where you're going to get a bunch of people failing and losing money when they're in too much pain. And as long as you can just continue to put these traders, as I like to say, buy at the bottom of the range, buy at the bottom of a range, sell at the top of a range. As long as you could get them initially in that position, it doesn't really matter what happens afterwards. For me, when I called the Merck bottom today, it didn't really matter that somebody was able to hold it over 60. That trader made over twice their money on the calls. Me, I made 20%. Do you think that I'm upset with myself? Do you think I'm beating myself up over this trade? Name like Merck, you could go as heavy as you humanly could imagine in a name like Merck. So I will leave you with just one thought before we get into our game plan in Forex. I'll leave you with one thought. Anytime you hear some system is so good and so great and so this and so that, understand that every single one of those systems, not most of them, every single one of them, 100% of them outside this system, because this is a one of a kind system. This is not what you learn in your financial textbooks. Besides for this system, every single one of them out there aren't focused in on buying at a low or shorting at a high. And because of that, there should be a disclaimer on all of them that you might be subjected to a lot of pain. And if that's your thing, if you're one of those people, maybe you're a masochist. Maybe you enjoy being down $1,000 before you're up $2,000. Maybe. You'll be like, oh, look, I did a good trade. Maybe that's you. The majority of the people are not like that. The majority of the people have been taught to take their losses real quick and try to let their winners ride. Me, my flaws as a trader, we all have them. And I don't know why people don't talk about that, which they should. My flaws is sometimes I cut my winners too short. And sometimes I cut them perfectly. But where I enter is, if not the most consistent entry strategy out there. And that's important. When I enter a trade, I'm up money almost always. How many of you open up a position, your P&L's down immediately? That's what I'm talking about, not me. I'm usually up immediately. And sometimes I cut a First Solar quickly, and it was a smart idea. And sometimes I cut a Merc too quickly, and I could have held it throughout the entire day. But consistency is paramount. And if consistency is what you seek, the only way you will ever accomplish it is finding the ability to buy at lows and short at highs, regardless if you take a minor amount of money, a medium amount of money, or a major amount of money on that trade. So, just wanted to shed a little light on that. Enlightenment. Now we're going to go into our game plan in Forex. Looking at right over here, just a few names here on the radar. Check, that's Check Cap, Diagnostics and Research. Little $2 name here. $7 name. I guess it was a $3 name recently. But a huge pop-up and check. I would look for a follow-through tomorrow of $7.80. Next one is TSG. The Stars Group is a gambling stock. And that one just exploded out today. Closed so strong. I'm looking for a breakout follow-through from 33.50, today's high. And last but not least is LE Bio. I know this is like the second day in a row I'm mentioning it. Now I'm mentioning it long through 227. Yesterday was a lower number because I guess it popped today, despite the bearishness in the market. And I'm giving you a really beautiful trigger here at 227. That's your April 4th high from last year. And a break of that level gets you 254. So very good chance that 11 Bio gives you another leg up tomorrow. I know this name is so played out. I've mentioned it yesterday, and I've mentioned it back in early April, and I just keep mentioning it, but I could see this one going. Next, ladies and gentlemen, are our Forex trades. All our Forex trades. These are all trades from my live account. You get to copy them. I take a screenshot of my live account. I have 3 positions open here. Here you get a buy limit. Here you get my size. Here you get the symbol in which I'm looking to purchase. Here's the price in which I'm willing to purchase at. Here's my stop loss if I purchase it and it goes wrong. Here's my take profit level if I get filled and it goes right. So, okay, that is those are my 3 Forex trades. And of course now, ladies and gentlemen, we're going to go into my full stock analysis. Your stocks, my levels and thoughts. That is for Newsbeat Live members only. It's the only way I could actually physically read your questions as well, which is also another great reason why it's like that. We are the fastest growing trading room in the nation. Happy trading, make money. We'll see you guys next time on the Newsbeat Live trading broadcast. Have a wonderful evening.